Welcome to our regular 6-minute strategy. My apologies, but Subitha and I filmed this on Wednesday before the aggressive rally in global equities, triggered by President Trump's 90-day pause in US tariffs. We still believe, though, the content remains relevant, and I've updated the slides to show the latest market moves. A year ago, US average tariffs stood at just 2.2%. After the President's speech in the Rose Garden of the White House a week ago, they rose to 22.5%, the highest in more than a century. It seems, though, that the President blinked on Wednesday after a global equity sell-off, surging volatility across bond markets, and a host of respected Wall Street strategists highlighted the very real risk of a US recession. In the event, the White House announced a 90-day pause, a flat rate of tariffs of 10%, and a 125% tariff on China. The market reaction was jubilant, triggering the best day for the tech-heavy Nasdaq, up 12% in 24 years. We still have concerns, though. Have tariffs truly reached their peak? Can we still avoid recession in the US? And how will the Federal Reserve respond? Finally, and perhaps most importantly, can the constitutional checks and balances in the US restrain this president? Or must investors begin to price in a permanently higher risk premium for US assets? We'll explore these issues in more detail in the slides ahead. Welcome, Subitha, to 6-Minute Strategy. I'm so glad you're here in these extraordinary times. In the left-hand panel, just let me update you on markets quickly. That's the MSCI World Index, rising right up to late January, then this sharp fall, giving up really all the gains of the last year. In terms of volatility, this crisis is significant. The VIX, as the measure of S&P 500 equity volatility, has risen above 50, something similar to what we saw in the Euro crisis, but not yet the wholesale trauma that we saw in the great financial crisis or COVID outbreak. No. What's causing all this? Well, of course, it's the new tariff rate. This is tariffs back to 1800, and we're looking at a number of around about 22.5% today, way above the 2% of a year ago, and that's without China's tariff numbers. Have we reached peak tariffs, Subitha, or do these negotiations go on?
So I think possibly with the US, we could have reached peak tariffs. There is the chance that as many of the trading partners, roughly half, as you can see from this chart, which include China, EU, and Canada, roughly these three large blocs will likely retaliate against the US. And if they do, there is a slight risk that the US actually comes back with further tariff escalation.
But as we see with China.
Yes, and even if we see those, I believe that with the exception of China, the tariffs on the EU and Canada have some room to fall. So I think we're likely peak tariff, yes, ex-China from a US perspective. The countries on the right, is just worth mentioning, is which account for roughly half of all US trade or half of US imports, which include transshipment countries such as Mexico, Vietnam, and Malaysia, countries through which Chinese goods possibly enter the US, or countries that really depend on the US for their security umbrella, like Japan, South Korea, and Taiwan. And independent countries like India, UK, and Switzerland. I think this set of countries will likely negotiate with the US and try to get the tariff rates down.
And talks are beginning with certainly South Korea and Japan in your security bloc, just as we speak. Against this backdrop, do you think that the impact you've already seen in the consumer confidence, in the inflation expectations, and in industrial surveys is so bad that a US recession is inevitable, or can we just skirt it?
I think the US has entered 2025 with enormous momentum. The economy was growing roughly at 3% at the end of last year. So it has a lot of positive momentum. Having said that, I think just the pervasive uncertainty that the tariffs are bringing about in terms of consumer inflation expectations, in terms of business investment decisions, it's just frozen activity in place. And we have, on top of that, we have the DOGE job cuts that are now starting to fan out across the economy. So the government is getting frozen in place. And we also have immigration crackdown, which suggests that possibly this year we could have a net negative immigration number for the US. So I think all of these really narrow the path to avoiding a recession in the US. Our expectation is that we have roughly, an economy that grows close to zero for this year, an economy at standstill.
Yes, I see. And against that backdrop, how will Chairman Powell react? Because he's already got quite sticky core inflation. He has troubled getting it down below 3. He's been above his 2% target for 4 years in a row. How's he going to act? Is he going to worry about financial stability, or is he going to push down hard on the inflationary impact of those tariffs?
I think the Fed has two goals. It has price stability and unemployment. I think the unfortunate situation with the tariffs are that they raise unemployment by creating an economic slowdown, and they raise inflation. So how is he likely to weigh between the two? I think if inflation starts to pick up, our expectation is that core goods inflation rises to roughly 5% as the tariff impact comes to play. So it really sort of hamstrings the objective for the Federal Reserve as far as inflation is concerned. And then unemployment is also likely to pick up. So I think as long as this continues to persist, I think he will slowly pivot towards addressing unemployment and we get rate cuts in place.
What's you going for at the moment for full year 2025? How many cuts?
I think we have not changed our view that I think we expect 3 cuts this year as the economy starts to slow. But I think they will be slow to cut in the initial days.
Fourthly and finally, this all raises huge questions about the checks and balances on President Trump or the White House. Is it time that we accorded a permanently higher risk premium to US assets because of this political volatility?
I think we're in very dangerous territory right now because the Democrats are being incredibly passive. Congress has abdicated or delegated its authority to the executive. The federal agencies are basically being hamstrung by DOGE. And so it's really falling upon the Supreme Court to adjudicate all decision making. So whether it's the Alien Enemies Act, which is allowing for these deportations, or it's the International Emergency Economic Powers Act, which is really allowing the president to impose these reciprocal tariffs on all its trading partners. It's going to all be decided ultimately by the Supreme Court.
But that takes time.
And that takes time. And in the meantime, you could have a lot of damage to the economy.
And the White House is in control. Well, I hope that's helpful. Just to recap our own policy here at Sarasin, we are underweight equities. We have a very strong quality overlay, which I think will provide real opportunities. In certain cases, we have defensive income strategies. We're underweight corporate bonds. We have zero high yield credit, and we have big cash balances, as well as a gold position. So we've battened down the hatches, and I hope we have a robust portfolio to trade forward with through the year. And there is, of course, always the possibility that one side blinks, so we get slightly better news and the markets can rally. Well, thank you very much. Thank you, Subitha, and look forward to seeing you in 2 weeks' time.